here is this interesting trading model I want to share with us. All right, so we'll be doing our top-down analysis. What is top-down analysis? Top-down analysis simply means when we are analyzing our chart from a higher time frame down to a lower time frame to spot out the right entries. Okay, all right, so let's look at our charts here. Let's start from a higher time frame, from the daily time frame. So now looking at our chart from the daily time frame perspective, we see that price has been in an uptrend, meaning it's making a series of higher high, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So price is clearly in an uptrend, looking at it in the daily time frame perspective. So let's go to a much lower time frame. Let's go to our 4 hours time frame. Now coming down to our 4 hours time frame, we saw that price also has been in an uptrend, clear in a bullish move. Clearly price has been in a bullish move. So let's take this out. All right, so when we got here, we have this break of structure to the upside. Okay, there was this break of structure to the upside. So after this break of structure, we call this a break of structure. Okay, so after this break of structure to the upside, so this is the zone that caused the break of the structure. Okay, if we go to a 8 hours time frame, go to our 8 hours time frame, we saw that this is a demand zone. Okay, we saw that this zone actually caused that break of structure. If we look at it from a daily time frame perspective, okay, from the daily time frame perspective, okay, this is the order block right here. This order block, this particular candle, this is the order block. Okay, so this is a demand zone because there was a break of structure to the upside caused by this particular zone. So we have that break of structure. So if we go back to our 4 hours time frame, we saw what happened here. Okay, and then of course when we got here, we had another break of structure to the upside. There's another break of structure to the upside, and then price broke structure. Now this particular demand zone, we saw that in the future price came in and reacted in that zone, but for this particular one also, when price broke structure, here is a break of structure. So when price broke structure to the upside, then let me take this out. Yes, so when price broke structure to the upside, so this demand zone triggered this break of structure. Okay, we saw that when price came in, it reacted in that particular zone. Okay, it reacted in that particular zone, and then it went up. All right, so now since price is in an uptrend, we are going to be focusing more on spotting out a bullish entry. Okay, meaning we're expecting to buy from a market like this. Okay, following the prevalent trend from the higher time frame perspective. All right, so now this is our demand zone. So we saw this demand zone in our daily time frame rather. So we see price tap into that zone, and then it respected the zone. It bought. All right, so now having seen that price tap into the zone, the price came in, it tapped into this hour zone, and then it bought. Okay, we also see something very important. When price bought, it got to this point, it broke this little structure here. So price got to this point, and then it retraced. So now price in coming back, it took out this previous low, it created a new low. Okay, so there was a sweep of liquidity here, down here. So there was a sweep of liquidity. Now this sweep of liquidity, it's like a fuel. So meaning price gather enough momentum by sweeping this previous low to form a new high. So when price came in, because of this liquidity sweep, there was enough momentum for price to go up, and then took out this previous high, and it created a new high. Okay, so what does that signal? What does that tell us? That tells us that this particular zone, this order block, this momentum move, it's signaling a buy. Okay, so it broke this structure, it created a new high. So let me take this out, so we are going to see what we are talking about. So let me take this out. So we saw the sweep of liquidity. This was the sweep of liquidity. So we can call that liquidity sweep. So liquidity sweep. So there was a sweep of liquidity here. All right, so we have that sweep of liquidity right here, and then of course we saw this order block. This is that order block. Okay, so that order block, it swept liquidity, took out this previous low, and then it broke structure. We saw that there's this break of structure to the upside, so we have this break of structure right here. Okay, we have this break of structure. So we have this break of structure. So this is that zone that caused the break of structure, meaning with all this that we have seen here, we have seen a liquidity sweep, okay, signaling a bullish move, and then of course we see this our order block that caused the momentum that broke structure. So liquidity sweep, break of structure, and then another thing we saw was imbalance, market inefficiency or fair value gap. So either you call it imbalance, call it market inefficiency or fair value gap. What does that mean? It means price did not trade at a particular zone efficiently. Okay, if you look at all these other candles, you see price traded all this, efficiently. Let's look at what I'm talking about. So now we have this our order block, this second candle and this third candle. So in between our order block and this third candle, there's this void that was created. This void was created. This is what we call our fair value gap or market inefficiency. Okay, or fair value gap, market inefficiency or imbalance. So price did not trade there efficiently. Okay, so we saw that void, and then this void will always act as liquidity, okay, where price will always be attracted to, which we have seen it actually attracted to into this zone. It came into price tap into that zone. So now let's take this out. So in spotting out our demand zone, we saw of course we have an order block, sweep of liquidity, okay, and then break of structure. Another thing we saw was imbalance. So we have gotten those confluences. So the next thing we waited for price to come in to tap into our demand zone. So price came in, tap into the demand zone. We have our order block, it happened, and then it moved. Now how do we have gotten an entry? We did not just see this and start buying. Okay, so here is this model we have here. This is the kind of model we are seeing here, where we have price doing this sweep of liquidity, and then after the sweep of liquidity we have a break of structure to the upside, and then price retraces to our zone, and then it bought. So this is our liquidity sweep. So this is the model we are seeing right here. Liquidity sweep, break of structure. So this is liquidity sweep, okay, this is the break of structure, which we have break of structure, and then of course this is our zone that caused the break of structure. All right, so price came in and tap into that hours at demand zone, and then it broke massively. So so this will be our demand zone. This will be our demand zone. All right, so price came in and tapped into our zone. Now when price came in and tapped into our zone, we did not just start buying. Okay, we need to wait for our confirmation entry. So price tapping now. So this is a 4-hour time frame. Remember, we can go down to a lower time frame to have a more refined entry. Okay, so look for a way to refine our entry further, refine our order block further, so as to minimize risk. Okay, of course, you know that the higher the time frame, the higher the risks. The lower the time frame, the lower the risks. So let's go to our 2 hours time frame. Okay, so coming down to our 2 hours time frame, we saw what happened here. Was there anything to refine? No, there was nothing to refine. We still have that particular zone. Okay, all these acted at that particular zone. So price actually came in and tapped into that zone. So let's go to a 1 hour. Now if we come to a 1 hour, this is where we would have refined it down to. This particular order block here, which we saw that price did not react to that zone. Okay, so meaning this zone we saw in the 4 hours and the same, and it agree with what we saw in the 2 hours. It's okay for us to look at for our entry there. We don't over refine. If you over refine, you are going to lose entries. Okay, there are situations whereby when we come down to a 1 hour time frame, we discover that it actually mitigates the same order block. It maintains the same zone as what we saw in the 4 hours and in the 2 hours. Okay, but in this case, coming down to a 1 hour time frame, we discover that that order block in the 1 hour time frame was not mitigated. Okay, so we stay with what we saw in the 4 hours and what we saw in the 2 hours. Okay, so in the 4 hours and the 2 hours, price has actually mitigated our zone, meaning price has tapped into our zone. So now the next thing we are going to look at for now is our entry criteria. Okay, entry criteria. So what do we look at for in our entry criteria? Remember, price has been in an uptrend, buying. Okay, so when price broke structure to this upside, is selling, is coming back here down to our zone. Now when price gets to our zone, whenever we see a reaction whereby it's trying to show us a change of character, meaning from this sell it was coming from, that it wants to buy, that's where we'll take our entry. Okay, so let's imagine, let's have this. Imagine price is we have a sell. There has been a sell, price has been selling, and then the moment price gets to our tap into our zone, we have a break of structure. Of course, it will be a change of character because it was selling and then it's buying now. So we have a change of character, retracements to the zone that caused the change of character, and then we buy. Okay, so this is our confirmation entry. Okay, so this is the break of structure, which is actually a change of character. Okay, and then okay, waited for price to tap into that particular zone. Okay, so that's the same thing that happened here. So when price came in, it was selling, which is what we are seeing here. Price was selling, and then it tapped into our zone. The moment price tapped into our zone, so we wait for a break of structure, a retest. That break of structure is actually a change of character. Okay, from bearish to bullish. So price tap into our zone and then it buys. So let's just go to a lower time frame to see how we would have gotten that entry. Now, so in our entry, having spotted our zone in the 4 hours, which agrees with what we saw in the 2 hours, okay, we can go down to a lower time frame to take our entry. So we can look at for our entry in the 15-minute time frame, or the 10-minute time frame, or the 5-minute time frame. At times it could be the 3-minute time frame, as the case may be. So let's go to our 15-minute time frame. Let's see if we have gotten, if there will be an entry there. Okay, so coming down to our 15-minute time frame, so we see how price tapped into our zone. We see how price tapped into our zone. So after price tap into our zone, price tap into our zone, we have this, and then this break of structure, okay, which of course a change of character because it was selling from bearish to now bullish, okay, which is actually the privileged trend. So now we have this change of character. Okay, price broke this previous high and created another high. You have that change of character, and then price retrace, and then it bought. Okay, so now remember, this is our entry model. We're waiting for a change of character, price retracing to our zone and buy. So this was a sell move, and then that's a model. So we saw, of course, the same thing here. Price was selling, so when price got to this zone, it tapped into our zone we saw that there was a change of character right here. Okay, there was a change of character. Price broke this structure, it broke this previous high, it created another high, and this is the zone that caused that break of structure. So this zone right here, this particular order block caused the break of structure. So look at what we have here. This is what we have here. So we see the change of character. This zone caused that order block here. So we're waiting for price to tap here for us to buy. So we have this model, we have this change of character, price retrace to our zone, and then it bought massively, which is this same model is what we see here, what we are having here. Okay, all right, so now we can take this out. So this is where we would have gotten an entry. This is where we would have taken a long position. Yeah. So when we saw this change of character, price retrace to tap into that zone, and then a stop loss would have been below this zone, this whole area. I put a stop loss there and then buy. Now our exit point, where would have been our exit point? Let's go to our 1 hour time frame. So coming down to our 1 hour time frame, okay, we saw that there was this high, there was this supply zone here. Okay, there was this supply zone, of course, swing high there. So this would have been our first exit point, our first TP. This is where we have exited the trade, though we saw what happened, that price went on to keep buying. Okay, so this is actually where we would have exited the trade. And then of course, since the prevalent trend is actually bullish, we saw that price of course it gave us this entry, and then it kept buying, it kept on, it retraced, it kept on buying, and then when we go here, we saw a break of structure to the upside. So now this is another opportunity to place our trade. So now we saw, man, price is really bullish, it's going up. The momentum is so massive. So now we saw this break of structure right here. So we have this break of structure right here. So we saw a break of structure to the upside, and this zone caused the break of structure. Okay, so let's come back to a 4 hours time frame. Let's see what actually happened there in the 4 hours time frame. Now, so for in the 4 hours time frame, nothing is very clear here. Okay, coming down to a 2 hours time frame. In the 2 hours time frame, so we got this order block right here, the supply zone. Now of course we have a break of structure. So now we came down to a 1 hour time frame. Coming down to a 1 hour time frame, that's where we are able to refine this down here. Okay, all right, so let me take this out. So we saw that this was the order block that caused this break of structure. Okay, so waited for price to tap into that zone before we look at for buy. So this is the model we have here. Okay, this is this model we have in the higher time frame. So we'll have a break of structure, price retracing to where we got the break of structure, and then we buy. So now, how did we got this entry? Still the same entry model we use in the previous one. So but we are going to go to a lower time frame. So let's go to our 15-minute time frame. Let's see if we would have gotten any entry, any opportunities to enter the market. So now in our 15-minute time frame, it is not clear, nothing is clear here, we are not seeing anything clearly here. Okay, all right, so let's go down to our 10 minutes time frame. So coming down to our 10 minutes time frame, there was nothing clear to have giving us an entry. So let's go to our 5-minute time frame. All right, so coming down to a 5-minute time frame, was there anything very clear? There was nothing clear in 5-minute time frame. So let's go to our 3-minute time frame. So coming down to a 3-minute time frame, we saw this is very significant. Something very significant happened here. Very significant. Okay, very significant. We saw that a change of character. Where did the change of character happen? Change of character actually happened here. This is where we have the change of character. Okay, change of character. So we have this break. to the upside. So this previous high was taken. Now, but before that, whenever we say liquidity sweep, it gives us a more confirmation that price is going massively, whether buying or selling. Of course, our bias is actually buy. So we see that before this move, this push up, we saw there was liquidity that was taken, which further confirmed that this is going to be a very bullish move. So there was a sweep of liquidity, and then price went. It didn't break structure, it retraced, and then it now broke structure. Okay, so with this we'll have a change of character, and this is that zone that caused that break of structure. So if I zoom in, we are going to see. So here is where we have that break of structure, this particular zone. Okay, this zone caused this momentum that broke this previous high. So this previous high, all these highs were taken out by this new high, this full body candle closing above, and then we saw there was a void there between this hour candle, this hour last down candle that caused this momentum, and this other candle. We saw that there was a void there. Okay, so now waiting for price to come and tap into that zone before we buy. Okay, so this would have been our entry. Our long position would have been here, and then our stop loss below this zone, a stop loss below, and so where would have been our exit point. So let's go to our 1 hour time frame to look out for exit points. Okay, so the exit point is as important as the entry point. Okay, so we have an entry point. Exit points could be your TP, take profit, or your stop loss. So now this is where we would have targeted this high. Okay, so this gave us a good risk to reward ratio. Okay, so this is how the trade actually looks like. Okay, it wins massively, and then of course it's still buying because the prevalent trend is bullish. If we go to our 4 hours time frame, we'll see that price has been buying bullish, is a bullish move. That's a prevalent trend. So this is how we got the trade. Okay, so this is a clear example of top-down analysis where we start analyzing our chart from a lower time frame to higher time frame down to lower time frame to spot out a clear entry. So these are the models. So practice this model, go through this video over and over again until you master this model. Okay, if you're able to spot out all these in a chart, okay, it will be very easy for you to look for a clear entry. Okay, so that's that for that, guys. So till we meet you again in the next video, bye for now.